Today we have Paul on. Paul joined us on the real estate side. He's been, I don't know, mortgage. How long have you been a mortgage broker? 20 years, something like that.
I've been in the loan business for over 17 years and mostly all retail. And then for over, I would say, past 2.5 years, I moved over to the mortgage broker side, and I'm loving it. It compared to retail, it's just so much more options, so much more different, many different underwritings and companies that you can go with. You can push things over. If it doesn't work here, you can go over here, and that's what I love about it.
Okay.
So hey everybody, so my name is Paul DiMambro. If you have the ability to turn on your camera, that would be great. I'm so used to using Zoom. I actually mentor 30 other mortgage brokers across the nation, and I love doing loans. It's just in my blood. There's changes every single day. I started back in, I think it was 2005 or 2004, and learned so many different ways how to do loans. And then when 2008, the market crashed, I had to really learn FHA and VA, all the painful stuff. And then ever since 2008, everything changes every day. There's no such thing that is consistent. And where I'm going with that, pricing changes all the time. If you recall, I think several years ago, TRID actually came out. And there was a joke in the industry, I don't know if some of you are aware about this, if you read it backwards, it simply reads dirt. TRID versus dirt, just more overlays and more layers of struggles and timing, things like that. So when I look back, okay, I understand why the government had to put these layers of protection and stuff. There was a hole. I don't think it would ever be fixed. It's something that we all have to deal with. And this hole is when another broker or retailer quotes a consumer. They find ways to tweak the number so they can go with them instead of the other, the competition. I was talking to Travis about in the last couple of weeks, and some of the issues in terms of that you're hearing, what you're seeing out in the industry. And from what I'm understanding, that you're experiencing other brokers and other retailers giving a set of quote points or origination fees or whatever you want to call it to a consumer. And then when you're doing your research and you're like, this is impossible. There's just no way that you can meet or beat it. Is this accurate? Especially if you're in UWM. Because if you're doing borrow paid in UWM, it's pretty much across the board, right? Where I want to go with it is, if you're in competition and you get a set of quote, the borrower is verbalizing, say, hey, yeah, this broker down the street, he's offered 2.5%, 30-year fixed, no origination, no point, no nothing. And he's, oops. Sorry about that. The best, I know, it's one of the things, right? How to do it in the Zoom today. Okay. And the borrower is pressing to go with you instead. The best thing that you could do is ask the borrower if they can provide you the fee sheet or the fee worksheet or the loan estimate if the loan's in process. You can tell the borrower that I can best help you if you could provide that information, and I can see whether I can meet it or beat it, things like that. Because without the documentation, it's all hearsay. So some borrowers might be sneaky, or the broker and the retailer, on the other hand, that's trying to do the deal, they also might be doing something sneaky as well. The shadiness in the business will always be there. It's just that, unfortunately, you have to deal with the headache. And if you really, truly want the deal, something in writing is probably going to do what's best. I don't know what you guys charge as far as minimum when it comes to borrow paid in terms of origination fee. Is there like a minimum, Travis?
Not necessarily. I mean, right now, you know, we're just wanting to get the business in. So obviously we want to make some money. So, but I do see some charging a flat fee and things like that, which I'm okay with. You know, if we need to beat out one of these other brokers. I think part of the problem that we're seeing is, you know, yeah, maybe the borrower is saying, hey, you know, I got quoted a 2.5, but they're not telling you that that was last week or even 2 weeks ago and stuff like that. And then maybe we're not pressing enough to say, okay, let me see it, you know, show me the money. So maybe if we can go through those talking points on how to tactfully request this information or, you know, handle this objection when they're saying, well, I got quoted this rate, because I had one say that to me and he sent me the LE and it was literally like a month old, you know, and I said, give me one for today from that same lender and then we'll come back to this conversation, you know? So, yeah, so
you were saying that you had one that sent you the LE from the other retailer or broker and listed their quote on the rates and fees, right?
correct.
And it was substantially a lot lower, right?
Yeah, because it was old. You know, they had saved it in their email or whatever for a prior property or just, you know, their approval process. And yeah, it was definitely an old rate, and they were still trying to shop that rate against, you know, competing lenders with a property that they just got into escrow, and now they needed to press forward with the loan. So the rate was irrelevant. You know, I mean, it could be irrelevant if it was 2 hours old, but still.
Yeah, that's the tricky part is that some brokers I'm seeing. So you guys use lending pad. I'm going to use that as an example. You guys use a lending pad as a hub. You know, you build your loan, you price it, and then you push it over. You push it over to like UWM or Caliber or whatever. The hub broke. You could do anything you want in there. You could put in any price or whatever you call it, and push it over. So if you're seeing a loan estimate that's coming from like a hub, I'm going to call it as a hub, that is not from UWM, not from Caliber, you know, from your lender, then you know something's up. You know that if you're like, holy cow, 2.5%, no point, 30-year fixed, that's impossible. If a lender is not on there, something's wrong. Somebody's not being upfront and truthful about the quote.
Mm-hmm.
Now, if you see a quote that's coming from UWM, Caliber, you know, it'll literally say loan estimate from these mortgage companies. I think UWM at the top, it's got big letterings and you know, the letterings are shaded and stuff like that. You'll know that's very, very accurate. And it's not going to be that low without putting points and stuff, because UWM, their system doesn't allow you to override the points and loan credit. It's not going to let you do it. Caliber, I believe, will let you override it, but for the most part in UWM, it's very accurate. So if you see something that's, you know, from Calyx or Lending Pad or whatever that's not with the name of the loan company, like UWM, like I said, with Caliber, then you know something is not matching up. That's the first thing you're going to look for. And if you see that, you can try in your own words to go back to the consumer without pointing fingers to the other broker or retailer saying that this quote doesn't seem accurate.
Yeah.
You know, without, I don't know how you would do it, like without pointing fingers, oh yeah, this other lender is lying to you. You know, you don't want to scare off the consumer to a point where the consumer is going to start thinking, okay, this guy just wants a deal and he's just pissed off.
Yeah.
You know, that's one way to look at it. But yeah, if you're getting it from that lender, UWM or Caliber, for example, you can always double check the numbers, you know, but most likely it's going to be very accurate because their system is set up to if something is not adding up, it doesn't let you issue the disclosures. So that's another way to look at it if you're trying to run after the deal. And the other thing that you could probably do is work up the customer service level, because I'm telling you, these people, this consumer, once they're rate driven, their brain is locked on that. They're not gonna, anything that you tell them is just gonna go in one ear and out the other ear. Okay. Does somebody in here want to share one of their experiences, other than Travis, or somebody else in here that want to share an
Yeah,
experience?
everybody should have the ability to talk.
Oh, they don't. Okay.
No, they do. Yeah, everybody should have the ability.
Okay.
So just go ahead and unmute if you want to talk about a scenario maybe you have going on, or maybe one that you lost out, and maybe we can kind of run through that scenario of, maybe you could have won it if you done this or something else. So, this will be a much better session if we have a little interaction. And obviously this is for you guys to kind of bounce ideas, and as basic as they are or not basic.
Yeah.
That's why we're putting this on. So I know we run into pricing competition all the time. So I thought that this would be good practice.
Right, and no question is dumb. In fact, it's an open book. So do you want to share? Anybody? Anything out in the industry? I know I hear that Orange County has like 10,000 realtors. Is that true?
I think it's actually a little more than that. So last time I saw, it was actually a lot more. I think it's closer to about 30,000.
No way.
I don't know if those are all realtors, but licensees.
Okay.
And then San Diego is, I think, slightly less. Riverside County and San Bernardino County are a little less than San Diego. LA is obviously the highest. I think they're around 60,000 maybe.
Oh, wow.
Yeah,
That's
there's a lot.
Okay, so as far as other things about, self-processing. I know that's the other thing I want to touch base is third-party processors. There are so many of them that are at capacity, and a lot of people have the idea of self-processing. I don't know if any of you guys are self-processing.
Just one, and he's not on right now. He has jury duty.
Oh, got it. Okay. Well, the other thing I wanted to touch base about while you guys are thinking about pricing is self-processing is such a heavy job. If you have one loan, I get it. But if you have like a few loans, I highly recommend that you continue using a third-party processor, only because there's a lot of legal aspect, timeline. If you miss a timeline, if you miss pricing on a disclosure, you can't, there are certain pricings that you can't just leave off. You can't just add back on. It's just, there's a change in circumstance, but things like, let's say you disclose a loan, you forgot to add third-party processing fee, or if you forgot to add appraisal, you're stuck with that.
Yeah.
Unless you do the loan all over again real quick, like in Caliber or UWM, but it is definitely a process.
Yeah. So can you take us through, like, if you get a client, a potential client come through and they want to get a quote, and maybe they haven't said that they've priced this out, but you have like kind of an inkling to that. Like how do you approach that situation where you feel like maybe they're already talking to another lender as well? I mean, I feel like we should all assume that anyways, that they're shopping this out to someone else as well.
Right.
So how do you, from kind of the beginning to getting it to getting that commitment, like what do you do to make sure that you stick with that client commits to you?
Right. So that's a very good question. So the biggest thing is upping your customer service level. That's like the number one thing. Communicate with that client, and just try to build a relationship with that client. So I'm going to give you some of my experience. So I just moved to Irvine, came from Big Bear. So in Big Bear, that market mostly second homes, people from Orange County, LA, and San Diego County. So my taste of what the people are like down here versus the people that live in the high desert or, in Big Bear. People in the high desert, Big Bear, or surrounding areas, when they're buying a primary home, I don't have an issue. I'm not finding issues with them sticking with me, but it's the people that are buying second home that are from down here that I'm trying to get them to stick with me. I find that if you stick with the customer service levels, they will continue to talk with you. They will increase their conversation with you. They will eventually tell you, okay, I want to let you know that we are talking to 2 more lenders. They will tell you that if you stay in touch with them. So for example, you do your quote, you email it to them, you call them, say, hey, I just want to let you know, I just emailed you the quote. I just want to let you know, these are the, touch base. Would you like to go over it? Can we go over it real quick? There's several things that went into effect from new regulations I want to point out, just talking point. Listen to the customer if they're just going, oh, where does this fee come from? Or where does that fee come from? Why is the rate so high? I'm finding myself, the people down here, they're like shopping for the best rate and like what you're telling me, like they're shopping. So the best thing to do is keep doing your customer service. If you feel like you don't talk enough, just find a way to talk. Just find a way to build a relationship. Why are they buying a second home, or why are they buying a house close to the coast, for example, or closer to the hills? Just find something. I'll talk about how their realtor found anything for them. Have they been showing homes yet? What is their experience? Are they looking for HOA locations or non-HOAs? Things like that, or Melrose or non-Melrose.
Yeah, that's probably a good one, because you probably want to factor that in to your estimate, and maybe it's not being factored in on another one that they're getting.
You just reminded me of something. Okay, so pay close attention to property taxes. Here's another one. Property taxes. Oh, property taxes and fire insurance. This is super important.
Yeah.
I also realize that people are looking very closely at their monthly payment, not just their P&I. They're looking at the whole thing. And some people don't understand fully, well, why is this payment $3,000 a month versus the guy down the street is $2,800 a month? And it comes to find out that maybe he didn't put the property taxes in, or maybe the property taxes wasn't padded enough. People look very closely at that. And the other thing is, so in Big Bear, I would use $125 a month for fire insurance. I don't know what you guys use down there. You always want to pad it. Now, property taxes up there is 1.5, 1.8% as an average. I don't know what you guys use down there, but you definitely want to pad it. And then when you're communicating with your client, now get this, you're telling your client, okay, this is a monthly payment. I just want to let you know I padded the fire insurance and I padded the property taxes only because I don't know where you're buying. I prefer you see this monthly payment than when you buy a house. Maybe it will be equal, less, or might be slightly higher. At least you're aware of it, because I would hate to tell you that it's less, and then you come back after you put the property in escrow that it's substantially much higher. So you want to think, what is it? You don't want to overpromise. You want to underpromise.
Over-deliver.
Yeah, underpromise. And then when it comes to property taxes and fire insurance, you'll want to pad it. You want to tell them it's padded. What you also want to tell them when you're quoting, well, let's see here. You're quoting and they decide to go with you. When you put the loan in the system, say you're floating the loan, okay? You want to tell them that you're floating the loan at a certain rate to keep them qualified, and that we can lock, that you highly recommend, I know this is a different market, that you highly recommend that you lock the rate when the appraisal comes back. I know it depends on the situation, but most of the time I tell people, I don't want to lock the loan at the bat, because If there are loan issues or appraisal issues, not necessarily to the property, but the appraisers are they're backlogged. So when the appraisal comes back and the underwriter signs off of it, there's no issue. Then you can go back to the customer and say, okay, we got the hard part out of the way, and let's go ahead and lock, if everything is in place. And the other thing is, if the customer is pressing the lock the rate at the beginning, I would start looking at maybe 45, maybe a 60-day rate lock, depending if the refi or if the purchase, only because there's so many issues out in the industry that from getting from point A to point B, such as the initial underwriting or the appraisal being ordered and the appraisal coming back cleared, things like that. If the rates are going up, if you look at the past, past several years, technically, you get the interest rate kind of going like this. They go up and down like a heartbeat. Like when you're looking at the heart monitor at a hospital, they tend to do that. Once you start seeing the interest rate going up and then they're ticking higher, normally, not always, normally it keeps going up and then it starts to stable. It takes 2 weeks, if you notice, about 2 weeks for this to go back down to where it used to be. And some people panic, and sometimes it's too early to lock the rate, but sometimes you just have to give in. Okay, wait, this customer really wants to lock. They need to be aware of, well, if we lock now, we don't foresee any potential issues. Rate lock extension will be very pricey. It really depends on the customer.
Yeah. All right. Yeah, because we do have some that are just adamant on, locking before they move forward. Some of them want to lock and then they're still shopping. Do you run across that scenario?
Uh-huh.
And then how do you handle that?
I'm sorry, what was the question one more time?
I've run into a few where the borrower, they just got into contract on a house and they're shopping around and they say, okay, I want to lock today. But then I can tell that they're still shopping around, which kind of sucks because then, they're still talking to another lender tomorrow and then the rate dips, or it's usually not so much the rate, but like the credits adjust, the following day because the market and, if it's even, a $400 difference on the rebate, then they end up going with the other lender. So, how do you handle that?
I know.
When you run across that scenario?
Okay. So, you're putting the loan in the system, you push it over to processing or whatever, and they're doing the disclosure. So far, you're putting work into it.
Yeah.
And you're excited. You got the loan. Order the appraisal first before you lock, because then the customer most likely are more committed to the loan because they're shelling out like $500, $600, $700, $800 for an appraisal. If they're like, yeah, I don't want to pay for the appraisal, then something's wrong.
Yeah.
Because I believe so many lock fallout. Is it does it look bad for a broker or no?
What was that?
So if you guys have a fallout, just if you have so many rate locks, so many loans that didn't go through and you locked the loan, did that look bad on a broker or no? Or do you know?
We get rated from the wholesalers.
Okay, got it. I should sure. So if the customer, in that case, if the customer is like, yeah, I don't want to pay for the appraisal right now, then you know that they're still shopping. I wouldn't even lock it.
Yeah.
I've had customers that will go back and forth between me and another person. And this person was shopping me like you would not believe. I've learned lots of lessons where I'm just like, you know what? I can taste it. If this customer is going to do it to me again, like a different customer, I can taste it. I'm like, you know what? This one might be shopping. I'm going to put this one aside. I'm going to say, okay, we're going to order the appraisal. If you really want to lock the rate now, we need to order the appraisal now. I need you to do the disclosures, because you can't order the appraisal without the customer signing the disclosures.
Mm-hmm.
And if the customer won't sign the disclosure, then you know something's wrong.
Yeah.
That's
Yeah.
one other way to look at it.
So try and get them to commit to ordering the appraisal. I mean,
Yeah, so-
obviously you want to get skin in the game. So to get them tied to you. Yeah.
Right. So once the initial disclosures go out, tell them, okay, so, because you can't even order the appraisal unless the disclosures are e-signed anyway.
Yeah.
But if they're not gonna sign the initial disclosures, that's another valid, like, okay, they're still shopping.
Yeah.
You can't get the loan.
Looks like Dean has a quick question or long question. I don't know. He has a question.
It's quick. So are you saying, because I'm telling my clients, and I'm really new, all right? So I've only done a couple of these. So I'm telling them, we do the disclosures and then sign up, pay for the appraisal, but don't let the appraiser come until we first have, say, UWM give initial feedback to see if we're going to have a problem or not, because they might spend the money and then might not qualify, and then they're going to be really unhappy, right?
I didn't quite understand the question.
So you're saying order the appraisal, but don't actually have the appraiser come and complete it until you get to the point where the lender is actually going to give you the conditions, so you know if you're going to have a chance of making the loan.
So using UWM as an example,
Yes.
I'm trying to think. So you're saying you still can't order the appraisal unless the disclosures come back e-signed, right? Or
Right. I'm already having that part. I'm going to have an e-sign, and I'm going to have we're going to run the credit, and we're going to send everything over, submit to UWM.
right?
We'll order the appraisal before we might hear back from UWM, just because you want them more committed to do the appraisal, but you're not going to actually have the appraiser show up, because if UWM comes back and says, hey, we have so many conditions and we're not going to be able to meet them, and the appraiser already came, then the $600 is pretty much gone.
If I understood the question correctly, so what you're asking is, what are the appraisal fees after?
Travis, did you get what I'm saying, or?
So he's saying that your volume's a little low too, Dean.
Sorry.
I think he's saying that he's already sent out the disclosures, and
Right.
he's asking, I think, so go ahead and order the appraisal, but don't have them go out to the property yet until you get like an underwriting decision.
Oh, you can order the appraisal anytime after that it's e-signed. So whether it's before or after you push it into underwriting, you can order the appraisal and then tell the appraiser to stand by on the appointment date, or you can do a predetermined appointment date. You can go that direction. When you order the appraisal, they still need a credit card information, right? Yeah.
Right.
So I don't think there's any lender out there that will allow you to order the appraisal without the credit card information.
And that's okay. That's okay.
Right, because I believe that once the appraisal is ordered, the link for the credit card automatically go out to the customer.
So they go ahead and pay, right? And then, but they're not going to be charged unless the appraiser goes out there, correct?
Actually, the system will charge it automatically. Once you plug it.
But if they don't go out there, what happens then?
If they don't go out there, then it has to be refunded to the customer.
Okay.
Yeah.
So does that answer your question, Dean?
Yeah, I just wanted to know. Yeah, I understand that, and I just wanted to. We're trying to get the customer. The client, to actually be committed. That's the whole point.
Well, I mean,
the appraisers are taking a while to get out there as it is.
Yeah,
It could be a week, it could be 2 weeks, it could be
especially, yeah, you're right,
it could be
Travis.
3 days sometimes. Like all of a sudden, like I have one and the appraiser's like calling me right away because they had a cancellation or something. I don't know. But
Right. It's like hit and miss on the schedule. I know some deals, it's not just California, that they're taking 3 weeks just for an appointment.
yeah.
So
Hey,
if
can
they-
I comment? This is Andrew.
Sorry?
I
This is
said I have a
Andrew.
comment on this.
Yeah.
Just to share. So going back to the original question, if you order the appraisal, you have to assume that they're committed to you because they've just given you money, and that appraisal is set to that property. They can't go to another lender and change the loan without doing another appraisal, which starts their clock over, and their agent on either side is going to flip out if this happens. So at that point, you should be 100% believing these people are with you from now till the end, unless the loan falls apart. Additionally, you're going to have both realtors pushing for that thing to get back to you, and UWM still needs that appraisal to give final conditions. So as soon as you get the cash for that, assume you've got the green light to push this thing through, and these guys are with you till the end.
So Dean's dealing with a refi that I think he's trying to get commitment from. Is that correct, Dean?
Yes, actually, I did get the commitment. Something strange happened. We paid, not we, my client just paid for the rush, an extra $400+. And it said, you know, we're going to have the report within 4 days. So we're thinking that's good because they're going to take 2 weeks. And we did lock. We locked already because every day, even though it's a jumbo loan, we locked the rate at 4, but every day the costs were going up a couple thousand. And I said, you know, bird in the hand, two in the bush. If it was me, this is what I would do. And so he locked it. Since he locked it a week ago, the cost for the loan, because it's not the 0-0 point, you know, you have to pay. It's a jumbo. The cost went from $7,000 to $30,000 in a week. So we were lucky, but we burned up some time. We may have to do an extension or extend the lock a little bit because the appraiser finally it's been paid for and for the rush, and they can't come out for a full week. So we're working on that. I think we just got it back to this Thursday finally. And my guy's leaving out of the country until he closes. So we have to have him sign at the embassy in Canada. A lot of craziness.
Okay. I know it's a little tricky.
Yeah.
That's quite a big difference going from what I think you said 7,000 to 30,000.
30,000.
Especially on a jump, a lot of money. And I would imagine that extending, when it comes to that large amount of money, I would imagine, I could be wrong, that if and when you do the rate lock extension, I would imagine that wouldn't be nearly $30,000.
I hope not, because
I could be wrong.
I'm gonna need maybe 3 days, 3-day extension. That's it. Possibly.
Oh wow, that does add up. Okay. So to wrap up their commitment, okay. So yeah, so try the initial disclosure is number 1, and then the appraisal order is number 2.
Okay.
Customer is like pushing you back on that, you automatically know that's going to be an issue. Because then you have to tell your realtor that this client is refusing to sign the initial disclosure. If you don't communicate with your agent, especially if it's a new agent, they're just to be like, okay, what's going on? Why didn't you tell me this before or whatever? Because sometimes if an agent's not aware that there's an issue and that they're still shopping, sometimes an agent can put a stop to that. They can go back to the client and say, hey, we have a contract and you don't want to mess this up. So you need to make that decision, who you want to go with. And if it's one of your favorite agents, that agent might add on and say, this guy is a good deal. This gal is a good deal. He's really good at what he does. I just need you to make up your mind who you want to go with, because the more you prolong this, then it's going to slow down. It's going to delay their escrow. the seller could come back and say, well, you're not removing your contingency, so we're just gonna put the house back in the market, or you really want the house? I have like 5 other people, so I'm gonna charge you a per diem. I haven't heard of the per diem so long, but I'm starting to see that pick up here and there if there's multiple offers. So yeah, so at the beginning, I would definitely try your best upping your customer service level. Over communicate. That was the other word I was trying to look for. Over communicate on email, text message, phone calls, things like that. That would be super important. Now, here's the other thing I want you to be aware of. Is Quicken or Rocket Mortgage part of? No, okay. Quicken, Rocket Mortgage is out to get people deals. They're out to get you. They're going to quote you one set of quote, and then when it gets to initial disclosures, when it gets to closing, the customers most likely are going to get a different set of quote. And that's what we're seeing out in the industry. If you're part of Brokers Are Better in Facebook group, you're going to see a lot of communication in regards to that. Quicken wants to keep working with brokers, but at the same time, they want to take them, refinance them, and they want to just take the deals away. For whatever reason, whatever, it's just competition. I just want you to be aware of that. So if you get a Quicken deal and the customer provides you a Quicken loan estimate or a Quicken fee worksheet, just know those are true and accurate, unfortunately. And if maybe you could try to beat it in so many different ways. I don't know if you guys have through UWM the ability to, what do you call those? Pricing incentives.
Mm-hmm.
I don't
Points?
I don't know.
You're talking about the points that you have from building up points?
The partner points.
I don't know if it's coming directly from the point, but they have like other programs. You should talk with the AE. I'm trying to remember the name of it. I think it's only.
No, he's talking about the partner points that you get every time you close a loan with UWM, and then you get partner points that you can use towards stuff like gifts. I think you can buy down a rate. I think you can apply it towards a lock extension. There's things you can use it for. You can use it. We flew Cecilia out to a training out in Michigan with them. Like you can use it for like a whole variety of things.
Okay, I'm not sure if this program is still out, but they call it matching. It's on a refinances only. They had it for the entire month of July and partial of August. I just don't know if that is still there, but on certain products. But if you're pressing for pricing and you have partner points, definitely look into that. If you don't have any partner points, or maybe you don't have enough partner points, definitely communicate with your AE, because all they want to see is a document like fee worksheet or some kind of loan estimate or something that if you can give them to, hey, this is what I'm up against. Is there any program that you guys might have to price match? That's the other word, price match. So they might be able to help, but as far as like the other companies, I don't know if they're price matching or not.
Yeah, I'm actually not sure. UWM did have something, I know, for a little bit, and I think it was from certain other lenders, Rocket and I think Fairway were on there, and possibly Caliber. Yeah. Where they were doing a price match, like if you had a quote from them, that they would price match it.
Do you guys have a lender near you that you guys are constantly competing against? Is there a retailer?
I don't know. Is anybody experiencing someone on the regular that they're getting shopped at? Quicken does come up quite often. And actually some of the banks, I see some of the consumers will go direct with their bank, like B of A or something like that, which ends up just being a nightmare, obviously, for the transaction. But they get quoted the rate and no fees and all this stuff.
Well, speaking of the banks, I definitely want to touch bases on this real quick. So Chase, Bank of America, Wells Fargo, there was another bank, I don't remember the name of it. I don't know if this has changed or not, but number one, Chase and B of A, they would not lend under 700 FICO score. They tightened their requirements up. I don't know if they loosened them up recently, but this came out earlier this year. And if people come to you and go, oh yeah, Bank of America or Wells Fargo, because we have $1.5 million in whatever account or private banking, they're giving us a deal.
Mhm.
Okay. Now,
I ran into that with US Bank.
US Bank. Okay.
Yeah.
Private banking means nothing because anything that's funneled in private banking, like there's Chase private banking and then there's Chase regular bank. No matter which channel the somebody's applying for a loan, it's funneling to the same operations centers, the same underwriting guidelines, the same loan officers, things like that. So what I want to say is I'm seeing more headaches and more overlays. So the timeline, I've never seen any of them close under 30 days, like UWM.
No, me neither.
I think it's more like 45 or 60. It's
Yeah.
more, and honestly, ever since the market crash, if the realtor understands that somebody's going to an FDIC institution like B of A, Chase, for a loan, most likely if it's a realtor from that's been in the business forever, they're going to tell you, oh no, I'm telling this client not to go there. Then there's a reason for that because the timeline, number one, and the underwriting guidelines, the overlays are so silly. It's like, for example, I'm going to throw out one of them. So one of them, I don't know which bank it is, but one of them, their number one overlay is no matter which loan product you're in, automatic to your tax return, which doesn't make any sense to a lot of the Fannie and Freddie loans. If it says, if AUS says no tax return, so why are you asking for tax return? So it just get more complicated.
So is that where you get in on the customer service level a little bit? You can maybe kind of pitch that as, hey, we're going with, UWM, they're the largest wholesaler, blah, blah, blah. The underwriting guidelines are going to be super simple. You're not going to be questioned for, because that is a pain point for some people, is documentation. They don't want to go and dig all this stuff out. And so especially if, it doesn't really make sense, like in that instance, based on their loan product, why are you asking me for all this other stuff? Is that something you approach when you're getting shopped as part of your rebuttal to them using, hey, B of A is giving me this special, I think it was US Bank, they gave like an extra incentive. It was like an 1/8 off or something like that if you had, X amount of money over at Morgan Stanley, or so they had some sort of like, agreement there.
Usually it's like a quarter, but I've seen
It could have been a quarter, I don't remember. It was some amount, but they kept going back to that and back to that, like, well, I get this deal though if I use US Bank because I have these accounts, these retirement accounts. So it was hard to sway. I don't even know if we got it. I couldn't sway him away from that, even though the timelines, I told him, I guarantee you are not going to make your closing date. I guarantee you, if you use US Bank. I'm not knocking US Bank. They've got good stuff. I have a great friend who's a loan officer over there, but like there is just absolutely no way. Call them and tell them, ask them your timelines right now,
Right. No, I totally agree with you. But yeah, definitely, because what these banks are trying to do is they're trying to increase their loan volume. They're trying to increase it, but they're not increasing their staff. I use the word staff. The banking institution, they're limited to what I tell them is how much staff that they have available in the operations center when it comes to processing and underwriting. So anytime that they're giving out a good deal, like an incentive, that's because they need business. They want to increase it, but they don't increase their staff. That's why the timing takes forever. And then on top of that, they nitpick everything about the file.
Yeah.
And that creates more.
I think it goes the same for refis because
they
push all the refis to the end, right? I mean, they're in the back of the line. So I'm hearing 2 to 3 months sometimes to close
Yeah.
a refi with these guys.
The bank looks at refis at the back of the line, just like you said.
Yeah.
In my experience with like UWM or Caliber, I haven't seen any of that. It's just whatever comes in from what I see.
Yeah.
So my suggestion to all of you, customer service level is like number one. That's going to be your biggest thing. If you get a deal that you see, if someone's like shopping and they got like unique credit, when I'm saying unique credit, I'm referring to like there's got to be work to this file and they're shopping. If they want to go elsewhere, I'll let them. And I will tell you why. You're going to put in so much work and you're not going to get paid.
Yeah. Or they're going to try and,
If they're
if
trying to
you have to go borrow or paid, you're not going to make what you feel you should make.
Right. So every time I see like an FHA or a VA deal that comes through, most of the time I just do lender paid because I know there's going to be a lot of work to it.
Yeah. Yeah, I agree. So we'll try and wrap up here pretty quick. But does anybody else have any scenarios or things they've run across that we can maybe kind of discuss? That looks like,
Oh, somebody raised their hand. Hold on. Oh,
yeah. Go ahead, Cecilia.
Hi, good morning. I just have a question where I ran into a scenario where a customer says they can get a loan done pretty much like no cost loan. So their APR shows the same rate, exact same rate as their rate. Like for example, if the rate is 2.75, their APR will show 2.75. So how are we going to compete with something like that? It sounds like it's like a free loan. The broker, the lender, whoever it is, are really not making any money. Like, how do we go about competing with somebody like that?
Where did that come from again? Did you say it came from another broker or?
Yes, another broker.
Okay. I'm going to tell you from what I see, most likely that's inaccurate because when I think of coming from another broker, okay, then you have all these fees that they're leaving out. Like, okay, yeah, third-party processing might be left out. Maybe they're self-processing. Are they paying for the credit report? So maybe they left that out. So apparently they're not working for free. So I would think that's more than enough that it's inaccurate. Because I know what you're talking about, and I've seen those here and there, and I'm just looking at it like, but another broker, it just doesn't make sense. Now, if it came from like another loan company, like, I don't know, Rocket or some of the like better mortgage, the low cost call center one, then to me, that's legit. That's really hard to compete against because they pay their loan officers very, very thin margin. That's like 30 basis point versus what you would get paid. And those are hard to compete with. Flip side of it, most of the time their turn times are just like the bank, where they take a long time. If the rate is too good to be true, number one, it's going to take forever. Number two, is it a bank? They're going to nitpick it. So a rebuttal is, yeah, you're not going to meet your closing because they don't have enough people and staff to look at it. They just want the deal and keep you in line. And most likely, once you're in escrow, once you're in line, you're not going to leave and go to someplace else when you're halfway through because they've taken forever, because they know that if they start it all over again, it's going to take another couple of weeks at the very least.
Yeah. Or what about, we don't want to throw other brokers and stuff like that under the bus, obviously, but
Right.
we know that if they're only making 30 basis points, they are doing as many loans as they can. We're always doing as many loans as we can, right? But obviously they are a strictly volume-based kind of model. So even getting a hold of the loan officer could be a real challenge throughout the whole process. And if this is a purchase loan, I don't know what would be your best way for expressing that, like the challenges that they're going to have with, nitpicking on conditions, or the service level is going to be just horrible, and why that could affect the transaction that you're dealing with.
Like what kind of rebuttal I would have on that scenario where
Yeah, if they came to Cecilia with this thing, and how would Cecilia rebut that with without getting into ethical
well,
issues of bashing competition? You know?
right. Okay. So here's another rebuttal that you could do. I mean, there was a deal back in November. They ended up closing it, but it was close enough. So the rate was really good. They did it to a call center. It was a purchase. My purchase agent was like really nervous because she was like, she had no control. So anyway, this company, I don't remember the name of it. They took so long. They started the process in October. They were supposed to close by Thanksgiving. They ended up closing middle of January instead. And when it got to middle of December, I stayed in touch with the deal with my agent to see how that deal is going. And she was telling me the negativities and stuff. So I would get in touch with the customer, say, hey, just wanted to touch base to see where everything's at. Is everything going smoothly? At the beginning, the customer wasn't communicating with me very much. But when it got to when they were supposed to close at a certain date and they weren't, she started texting me. And I said to myself in my head, you know what? I am going to do my best with her. I'm going to show her my customer service, even if I don't get the deal. Okay, you got to put that in your mind. So we were communicating back and forth. They were over a month late in closing, and she had like maybe, I don't know, maybe 3 weeks worth of rate lock extension. It was very pricey, very, very pricey. After closing, her rate, it was an FHA loan. She was given like a 4.5% interest rate on a second. No, that wasn't. It was just conventional. I'm sorry. It was a 4.5% rate on a second home conventional. And I couldn't figure out why she was getting such a high interest rate. I figured they were, highballing her or whatever. I tried to explain to her that, well, if you went with me, here's your rate. But then I told her, because you're supposed to close around the corner and they keep telling you, oh yeah, in the next few days, she even signed the loan doc. I told her, you know what? I don't really want to screw that up. Because if I take you with me, that process is going to be at least another 30 days, maybe less. So I told her at the customer service level, I said, you're supposed to close anytime now. I really don't think you should screw that up. You know what I mean? So she ended up closing, and she came back to me, and it was like February. We ended up refinancing her. So I ended up with the refinance out of her. I think we did like, I don't know, 3.25, something like that. So I ended up getting the deal, but not on the purchase side, but on the refinance side.
Yeah.
So you can look at it that way. If you program it in your mind, staying in touch with the customer. If you feel that between the agent and the customer, there's some kind of communication, you want to ease your agent, relationship building, that kind of stuff, you could do that as well. That's another way of doing that.
So, I mean, that's a pretty good point. If you do lose it out to someone else, to reach out to them, 5 months later or whatever, keep in contact with them, because there's a good potential that maybe things didn't go well, or you kept in touch during the transaction, so you knew it wasn't going well, and then you ended up getting the refi anyways.
Right. She even, when she was telling me this, I told her, send me a closing statement. Maybe you should take a look at it. In back of my mind, I was like, what is she paying? What was going on? So when I got the CD, and I was like, holy cow, I can get a refinance out of it.
Yeah.
I didn't want to take the purchase. I'd rather refinance her after she closed it.
Yeah.
And that's what happened.
Yeah. And now you're a hero, I guess.
In her eyes.
Yeah, in her eyes.
And the realtors, I know.
Yeah.
Those are some of the good things that you guys and gals can do.
Okay.
Thank you.
Oh, you're welcome.
I have a quick question. Just a quick, Travis, and this doesn't have to do with the presentation, but I just logged into UWM because I'm having an issue with something, and I noticed that we have a new account executive by chance named Brian Young. He's the picture showing up. It says meet our team.
That's news to me.
Okay.
I mean, I just got a call from Karam like 3 days ago asking about, meeting up with his product development team and stuff like that. So,
well, What
That would
was
be news to me. I'll call him after this though and see what's up with that.
What was
Okay,
it about the military and UWM?
What was that?
What was it about the military and UWM? I didn't catch.
No, he's saying that he just logged into UWM and it's showing a picture of a new rep
Oh,
that I had no idea of.
last week, I actually thought it was just our company, but last week when I logged in, I was like, where's my AE? And they changed everybody. And yeah, they had a huge change. I actually thought it was just us, but apparently it's not. So yeah.
This is
It might
news to
be-
me. I wasn't told of anything. And like I said, I just got a call from Karam just a few days ago, who was our AE at UWM. And he made no mention of, hey, I need to talk to you because things are switching up. So
And the other thing, now that they changed rep, what you want, if you guys are guys and gals, if you're used to using Blink, what you need to do is log into UWM, find your way to Blink, and just make sure that Blink is enrolled. Because a lot of times what happens is when they switch AEs, Blink has to be resetted, not necessarily resetted where you lose your Blink pipeline, but it has to be reassociated. That's the word I'm trying to use.
reassociated.
If
Okay.
it's not reassociated.
Okay. We'll have to, I'll check into that. I'll log in too, and then I'll call over there, or maybe I'll just call the new guy and say, hey, nice to meet you. So
Likewise.
hopefully he's a little more responsive than our previous rep over there. So
okay, well, I just logged into Blink and it seems to be working.
Oh, cool.
So, but I haven't really done anything but the sheet.
Yeah.
But I do have, would it be okay to ask another question? Because
Yeah.
it has nothing
why
to
we're
do
here.
with this and it's,
Yeah.
it might be offline, but I submitted two applications. Natalie submitted two to UWM yesterday and they got approved. Submitted them Sunday, they got approved. So 1 day clear is what I got, one day acceptance or whatever they call it. And so I spoke with the borrowers and we locked. And because they already had the disclosures and already showed what the estimated closing cost was going to be and all that on the LE. And we made the loan high enough to cover everything because one of the conditions for the borrowers is that we don't want to be out of pocket for anything, just put it into the loan.
Right.
So I did that. So we locked. And now I get a new LE, sorry, excuse me. And they increased the cost by about a couple $1,000 just from the other LE the other day. It looks like I have to go through it, but it looks like, it has the insurance and some other things. And I just got a text while we're talking, hey, we're only going to do this loan if there's no out-of-pocket cost. So I don't know, do I contact, who do I contact to even talk about that? I mean, this is all new to me.
No, you're talking UWM, right?
UWM just increased the estimated cost for
Okay.
the LA by like a couple $1,000s on each loan.
Do you know where on LE this specific cost was increased?
I believe it's, and I have to go through it because I'm just doing this while we're talking. I shouldn't multitask here, but it looks like they increased the property taxes from 2 months to like 6 months or 9 months.
Oh, the impound. Okay.
Yeah.
There might be a reason for that. So you said it was a refi, right?
These are both refis. Yes,
Okay. This refi is in California, right?
correct.
Okay. And when's the closing date?
I'm gonna have a closing date here.
probably September sometime.
Yeah, in the next 2 weeks, I guess.
Yeah.
Next 2-3 weeks. Yeah.
I'm
We
guessing
just locked
the
2 days
closing
ago.
date
Yes.
where they moved it from a certain date where they're going to make sure that there's enough money in there to pay for the property taxes for an unpaid property taxes that's showing unpaid that's coming up in December. Because the closer you get to October, then the impounds, they start padding it. And part of that, I believe, is going to pay for the property taxes in December. And I believe that's the customary across the industry. Now, their existing impound account, if they have an existing impound account, what's going to happen is you can always tell your customer this. Okay, so what's going to happen is now UWM is saying, okay, we got to make sure there's enough money here to pay this, but they're not thinking about this impound account that they have existing. So what's going to end up happening is whoever the lender is now, once the loan gets paid off, this lender has up to 22. It's either 20 or 22 days or business days. They're going to get a check in the mail to pay this. I believe that's what's going to happen, and your customer is going to get it back one way or the other.
So, yeah, I mean, if I
Why
understand
would it
the
be
the
nine?
client's
Why would it be 9 months? I mean, I think I saw it just a minute ago for 9 months. I'm thinking that's a lot.
9 months. He's asking why it would
9
be
months.
9 months of impounds.
9 months of impounds for property taxes. They've had this loan for a while. And you know, that didn't show on the original estimate. I'm just thinking, who do I contact there? Because I know that, you know, I'm getting texts right now. It's blowing up that they're not happy. Sorry about that, but I just figured it's a good time to ask the question.
Well, it's a perfect time to ask. I mean, this is a challenge that would come up. So, I mean, that's why we're doing this. So, I mean, have you seen them waive that at all, Paul? Like
Waiving the impound account?
the amount that they're now asking. Before they were asking 3 months, and now they're asking an additional 6 months. It sounds like.
Yeah, that's something that you can't. The only way around it is as you get closer to closing, if escrow is showing that it's unpaid, the lender is going to pad enough money in there to make sure that it gets paid as you get closer to October. The only way around it that I can think of is if the existing lender paid the property taxes and escrow can get a document showing that it's paid through the county, not a paycheck, but through the county, then you can go to UWM and say, oh, here you go, they just paid it. Then UWM is going to reduce the amount of impound down to whatever it needs to add up for the taxes due next March or April. And this is stuff that you really can't, this has always been a challenge every year around this time. It varies from, you know, lender to lender.
Yeah.
How about increasing the loan? Well, they won't do that. I just locked it, right? So they won't.
Yeah, so it's going to show all of a sudden the customer has to bring in money. So the customer has two choices. Either they bring in their money, or you can ask them, would you like to roll it into the loan, increase the loan?
Okay,
You
we can increase it, right? That's
You
I
can,
don't know.
if there's enough equity that meets the guidelines, you know, the matrix, that kind of stuff. Absolutely.
It sounds like it's a couple $1,000s, right, Dean?
Yes.
yeah. We're talking 4,000 on one and 1,000 on the other, and both LTVs are under 62.
Okay. So you definitely want to check how much equity they have in there. If it's like, I don't know what the detail is, but if the property is 70% LTV or whatever, it seems like you can just roll it in. But if the property is at 75, 80, or 90, depending on the program, you want to look at, you know,
It's under 62. I was this, like I said, I'm new. I didn't know that you can increase the loan. I always thought you can only decrease it, but not increase it.
what was the question?
I thought that you can only decrease amount of the loan, but not increase it because I've already locked it and
Oh.
we've already disclosed it.
Okay, if I understood the question, you can definitely increase the loan amount. It's just that anytime you increase the loan amount, you after you do a change in circumstance, the underwriter has to not necessarily re-underwrite the file. They have to rerun the AUS and make sure they still remain, you know, qualified or remain approved.
Which
That's
they
all it
should
is.
with that kind of loan to value, I would think.
Yeah,
Oh,
yeah.
I
yeah,
don't think it's gonna
that
change.
won't be a problem. Okay,
Yeah,
I didn't know that. I didn't know that was allowed, and I thought, oh my gosh, we're in trouble. We can't increase the
Oh.
loan.
I mean,
Okay,
rebuttal, I
Thank you.
guess. I mean, it's that time of the year where, you know, I mean, we're literally flipping over into a new month, and you just got that approval, so maybe they're just anticipating that, and that's their policy for adding on the extra impounds. I mean, it's literally being applied towards their property. I mean, it's not like it's a junk fee or anything. It's stuff they have to pay for the property. So,
Their money. It's not a fee. It's actually their money, whether you're doing 2 months or whether you're doing 9 months of impounds. I mean, if you, like I said, upping your customer service level and you're talking to your customers about all the fees and the prepays and the impound account, making them aware, so that way they're aware of it, because what's going to end up happening is, like I said, another broker or another retailer bank, they may not be doing 9 months of impound. They might just be doing like 3 months or 4 months. And people are like looking at the bottom line going, oh, this is really low. Oh, this is really low. We're going to go with this person. And then when it gets to closing or when it gets to the CD, look at this. Holy cow, what's all these, they call it in their brain, what is all these closing costs? What is all these fees? And you got to explain to them, unfortunately, property tax, most of it is their money, not the fee.
Yeah, we get it. It's not that, it's just that they don't want to be out of pocket. So do I contact UWM or somehow account executive or go through processor or how do I do this? What's the next step for me?
Right. And then Paul made a comment and it washes back. You know, they're eventually going to get their money. It's just a matter of whether you're going to roll in the existing, or excuse me, the new impound, they're going to get the money back from the other loan, and vice versa. You just got to educate. You know,
I think that the biggest challenge is, you know, Dean made a promise that they're not going to come in with any money, and that's how we had the loan set up. And then now it came back with this additional 6 months of impounds requirement. And so now he's wondering, where do I go from here to still satisfy the client of not bringing in any money? You know, how do I just kind of fix this?
Exactly.
Your existing lender didn't pay your property taxes yet. And so here we are, we're getting close to closing. If you want to, depending where you are in the process, you can say, okay, so because your existing lender didn't pay the property taxes yet, now in order to close, we have to make sure that those are paid. So what would you like to do, Mr. Bauer? Do you want to bring in the money and that's going to pay for it? Or do you want us to increase the loan amount, which is roll it in? But either way, when your other loan gets paid off, you're going to get your money, whatever, you don't say 100% back. You're going to say whatever money that you have in the impound account with the existing lender, you're going to get it back 20 to 22 days after the loan gets paid off. You can kind of work that rebuttal. And the one thing, in my experience, I wouldn't use the word promise or imply the word promise on anything.
I don't really promise, but that's why I like to quotes.
Oh, okay. It's just, it's hard. Get it.
All right, that sounds good. I mean, the bottom line is the only issue is we don't want to come up with money. I'm back and forth by text right now. So I will, as long as I know we can do that, I guess I'll speak with Natalie so we can increase the loan to cover it, period.
Okay.
Okay.
I think it's not going to change much, and they are going to get a check from after their loan gets paid off. You know, their existing loan, once that gets paid off, they're going to get a check from that impound account.
Okay.
What that amount
Okay.
is, yeah, I don't know. Escrow actually might have that figure because they might know. What do you think, Paul?
I think so, because the payoff will show, like on the second page of the payoff, it will show something like account balance with impounds or something like that, and it'll show a figure.
Yeah. So escrow might have that figure too of what they're going to get as a refund check out of their existing impound account.
Right.
Okay. Well,
That may help too.
Travis, you and I can talk afterwards.
Yeah.
At some point, just to smooth it. Okay.
Okay.
Perfect.
Cool.
Thank you.
We're
Thank you.
about an hour and 15 in, so I'm sure everybody has stuff to do, and we could probably go on and on about different scenarios and things we got going on, but we could save it for a different one, or obviously you can contact us, you know, or contact me, and we can go through them. But yeah, I think we should do this again. I think this has been good. just hearing everybody's scenarios and some things like that. So I think this was pretty productive.
Yeah, absolutely. I think that would definitely be very helpful just for anybody. And yeah, absolutely. I'm looking forward to the next Zoom. So
Yep. All right. Sounds good. All right, guys. Well, thanks for joining. Really appreciate you guys all coming on. And give me a call if you have some things going on. So
all right, you guys have a good day.
all right. We'll
Thank
see
you,
you.
Travis. Thank you, Paul.
Bye. Thank you.
Bye.
Bye.
Bye-bye.
Bye-bye.
Bye.